Can you guys see that? My sister got that for me for my birthday and I thought it was pretty cute. If you're new here, my name is Brittany. I've been trading stocks and options for over 7 years and I made this channel to simplify all things trading and investing. We're gonna go over a Tesla trade I took on Friday, which was on my smaller Lotto account, which is my Robinhood account, where I just throw in $1,000 and usually try to take a couple of trades just to show you guys what a small account can do. But I will say a lot of them are on the more risky side and I will go over how you can lessen that risk. I know there's just always going to be risk associated with trading, but there are ways to mitigate it. So first thing you want to do when you're about to jump into taking a trade is you should always have a plan. So that should look like your entry, your exit, and your risk level based off of those two things. And you also want to assess every single time and make sure that your reward is going to be worth the risk that you're taking. So one way that I like to trade is I have key pivot levels that I have on my chart right now. And so these key pivot levels give me an idea of how far we are from them to tell me if I'm going to take that entry or not based off of where we are on the chart. And so you can see right here, this pivot level held so well. And so a plan of yours could have looked like taking calls since you missed this original entry. It could have looked like waiting for the retrace back to support at your key pivot level to then take calls into end of day. But for me personally, I don't like to trade towards the end of day on Fridays. And so I was looking to take the early morning trade, which was this one right here. And so we gapped up in pre-market, but we were falling pretty heavily. There were some rumors going around about bankruptcy on Twitter, as well as some Tesla news. And Elon's just been in a big mess since taking over Twitter. So there has been more volatility with Tesla, which isn't a bad thing if you can play it the right way. And so with this gap up in pre-market, I was paying attention to this range right here, but we easily lost that before open. This was actually the preferred scenario for me because I like to buy calls on a dip. You have a better risk versus reward. And so I was looking for my key pivot level of 187.44 to get reclaimed. I also have other indicators on my chart. You can see these two lines, which will give me an extra confidence boost if I see those cross and maintained that the trend is now reversing up in my favor. And so these are all things that I teach in my 8-week program. But as you can see, once we had this really strong green bullish candle over my key pivot level, I got the cross I was looking for. That was my signal to take calls. And so this little position right here was where I caught 200%. And I was looking to see how the pre-market range was going to hold up. You can see we retested this gap right here and we started to catch some resistance. My next key target was near 197. We actually didn't get there until towards the end of the day, but like I said, on Fridays I like to be done early, so I could have played this 2 or 3 times, but I was definitely happy with this one move. So now let's move on to what option contracts I was trading and how you can adjust this to your experience level. So to achieve over 200%, I'm sure you guys, if you're familiar with options, understand that I was trading very short-term expiration dates. When you get large percentage gains like 200-300%, just expect the person to be trading very short-term weeklies or 0 DTEs. And that comes from experience and confidence in your craft. Where people go wrong is they jump into that just wanting that big hitter and they're not able to properly react fast enough because they are so fast, guys. They move so fast. You have to be able to react and be disciplined. So let's just say that you are not there and you're more on a beginner stage of things. You could go further out in expiration. So for example, these are the 210s, and I just want to show you an example of what it would look like if you didn't trade something that was so risky, and you could have still made a very good profit off this Tesla call trade. And so the 210 calls on Tesla started the day around 82 cents. They ran all the way to 228. You could have more than doubled your money. They came back down to $1 and then ran to $2 again. So there was 2 opportunities, and that was from here back down. If you missed the first run, then you could have waited key pivot level, and then the second run towards end of day would have given you another opportunity. I had a plan going into pre-market open. That plan included me looking for the key pivot level, which I had planned before market opened, guys. I plan these things before the day even starts. And so that way I'm not reacting off of a stressful situation. You're in the middle of, the market going up, down, crazy volatile moves, and you're just trying to throw a dart and hope it sticks. No, I plan all of these things before market opens. And that is very, very key if you're going to be successful long term. You've got to be proactive, not reactive. And I hope this was helpful for you guys. If it was, make sure to give this video a thumbs up, share it with friends and family if you think they could benefit from something like this. And then, like I said, one more time, make sure to check out that free November training, which is in the description box down below. If you want to say hey on Instagram, make sure you are not following any of the 10-15 spammers that I have. I'm sorry guys, just make sure you block and report those. The only Instagram I have will be linked in the description box down below. And that is all for me today. I will see you guys next week.